morning everyone. Myself Mrs.M.Rajeswari, Assistant Professor, Department of Commerce, the Standard Fireworks Rajaratnam College for Women, Sivagasi. Today I am going to discuss about fraud in auditing. So what do you mean by auditing? So auditing is a systematic examination of the financial records, statements and the business operations to verify the accuracy, reliability and the compliance of law and standards. So it provides the independent assessments of financial statements to enhance the transparency and the accountability. So in narrow sense, audit it refers to the verification of financial statements and assessing their authenticity and the fairness of the statement. So today discuss about the topic fraud. What do you mean by fraud? So fraud means the intentional purpose doing any activity under the unlawful way or to gain unfair gain. So this is the meaning for fraud. So it refers to intentional misrepresentations regarding the financial information by one or more individuals among the management, employees or the third party is called fraud. Then the fraud may involve manipulation, falsification or alteration of records and documents, and another way of fraud is misappropriation of assets like cash, goods, whatever the assets of the company, it should be misappropriated by any of the one like employees or management or any other person. The next one is suppression or omission of transactions. The next one, recording of the transaction without substantions. Then finally misapplication of accounting policies knowingly. So next, one by one, misappropriation of assets. So already I told assets include both the cash as well as and goods. So misappropriation is the wrongful conversion or fraudulent application of assets of the particular concern. It may be committed by recording wrong purchase in way of misappropriation of goods, wrongly enter the purchaser's amount. It may be either in the goods or it may be in the form of cash also. Such a kind of frauds can be detected by proper maintenance of accounts, as we have to detect the records of purchase as well as sales in the separate format. And also regular stock taking is maintained in your organization. This kind of frauds are avoidable. Then strict check on incoming as well as outgoing goods records also maintained by the concern. So following these steps, the misappropriation of assets, it should be avoided by the particular concern. The next type of fraud is manipulation of accounts. So it may be made by false entry in the business records or altered, erased, removed the true entry from any of the record, and also omitting the particular records. Especially this type of manipulation of accounts is done by the higher officials in the organization. The next type of fraudulent activity is teaming and lading. So it's also one of the fraud. It's committed in connection with receipt of cash. So at the time of receiving cash in the name of company, the particular employee fraudulently cheated the amount for his personal usage. It's the meaning for teaming and lading. So this type of fraud is prevented by the transactions are made only through check, not using the cash oriented transaction, and also the work of collecting cash, maintenance of cash book, it's not done by particular employee. It also mingled with one person in charge is avoidable. So what is the difference between error as well as fraud in auditing? So as the definition implies, both the errors and frauds are leads to misstatements in financial records, but it's differ in the different way. Error is an unintentional mistake, not made by purposively, but fraud is made intentionally. The next one is intent. So no intent to deceive, But in fraud, deliberative action to mislead the stakeholders to gain the unfair advantage. So the example of error is misclassification of expenses. In preparing the types of account, personal account is misleadingly entered as the nominal account. So that type of example is suitable for error. But fraud is embezzlement of funds and manipulating the revenue figure also. The next difference is impact. So error impact the financial accuracy, but it's correctable one. But fraud, it's not correctable, and it's also affect the legal as well as the reputation of the particular concern. Then deduction, by continuing audit as well as the reconciliation maintained by the particular concern, error is deducted. But fraud requires forensic audit as well as the whistleblowing mechanism followed only enough to find out the fraud in your organization. So thank you for watching this video. Hope it's very useful for you, and I will meet you in another one. Thank you.